What's up, my fellow wealth creators? Matty Ice here. So today I am really excited and honored to share a fantastic conversation that I had with a longtime mentor of mine, Caleb Guilliams from Better Wealth. It's just kind of surreal getting him on the channel because I followed him for a really long time. I've learned a lot from him over the years, watching his YouTube channel, also reading his book, The And Asset. It's one of the first books that I read when I started my journey with infinite banking and learning more about whole life insurance and stuff. Highly recommend you guys get a copy. It is fantastic. And that's actually the topic of our conversation, just breaking down what the And Asset is. High cash value, dividend paying whole life insurance and how it works and some of our favorite benefits, how it gives us allows us to compound and control our money at the same time and the value of that. And Caleb also provides a really, really good framework for deciding when and how to use your policy, like when to use your policy for what. Is it buying a car? Is it investing in real estate, investing in a business, whatever, provides a really good framework for that. So just an awesome conversation overall, guys. Highly recommend you check out the whole thing. Make sure you stick to the end. I'll put some timestamps down below as well. And then make sure you check out all the links in the description as well, because so I'm going to link out to his book, obviously, but I'm going to provide some additional like free masterclasses for you guys to take your knowledge to the next level about this stuff. So hope you enjoy the podcast, and I'll talk to you soon. What's going on, my fellow wealth creators? Matty Ice here. Welcome to another episode of the Millennial Wealth Creator Podcast. Boy, do I have a treat for you guys today. I have my new good friend and longtime mentor, even though he might not know it, Caleb Guilliams from Better Wealth, also the author of The And Asset. Got it right here on my iPad. If you guys have not purchased this book yet, you can't see it too good, all right? But if you have not purchased this book, pause the video, pause the episode, and go get the book right now. That book absolutely changed my life. I experienced so many paradigm shifts when it comes to money and just shifting my thinking around money. It just made such a profound impact on my journey. And today, Caleb has been kind enough to give us some of his time to talk about the And Asset. We'll talk about some specific things regarding And Asset, how it's made impact on our lives, why it's I think more important than ever. And we'll talk about obviously what the And Asset is. But yeah, today's going to be freaking awesome. So Caleb, first off, thank you so much for being here, man. I got to tell you, it is an absolute honor and privilege to do this episode with you, because like I said, you've had such a profound impact on my journey. And your book was one of the first books that I read when I started going down this rabbit hole, I'll call it. And it just made such a profound impact on my life. So it truly is an honor and privilege to have you here, man.
Awesome, dude. It's an honor to be here. It was awesome meeting in person a couple weeks ago, and
Yeah.
it's just exciting to see what you're up to. And I love co-creating, and so hope this is valuable for everyone listening and watching.
Absolutely. Yeah, so I had the privilege of meeting you at the Life 180 Aligned Wealth Experience. It's really surreal to meet people in person that have had such a strong impact on your life. So it was really cool. That was just freaking awesome event too. If you guys weren't there, I don't know when the next one's going to be, but definitely check it out. It was freaking amazing. So what I figured we would start with today is what the And Asset actually is. I think that's a perfect term for what we're going to be. It's a perfect phrase for what dividend paying whole life insurance really is, I think, because a lot of the times there's this misunderstanding that we can only do one or the other when it comes to personal finance, when it comes to building wealth. You either buy term and invest the difference, or you buy whole life insurance. You can't do both. And that applies to a lot of different things. So what I figured we could start with and kick off with here, Caleb, is what is the And Asset? If someone were to ask you that and you were introducing this to somebody for the first time, how would you answer that question? What is the And Asset?
The And Asset is my branded way of explaining whole life insurance. And the epiphany really came down to, well, life insurance is an awesome product. It really is. It's not an investment. It gets overpitched in a lot of cases, but if you actually understand how it works and how it can be utilized in other products and assets and in your portfolio, it's really amazing. And what makes it amazing is there's a lot of different jobs that your insurance policy can do for you and your family and your portfolio. And we really do ourselves a disservice if we're just talking about the internal rate of return, or just talking about the function that you can borrow against, or just talking about any one thing, I think we cheapen the product, and we don't understand that it's an and. There's a lot of things that you can do. And so whether it's the and asset or the multi-asset, both words kind of are very similar. It's like, how do we get people to understand that you don't have to choose between one or the other anymore? And that for me was like the light bulb moment. I'm not a very great reader. I don't learn by reading books, ironically. That's why my book is really easy to understand, because it's like I wanted to write something that I could understand. But I think in word pictures, and the and asset worked really well, because an asset is anything of value that can add value to you in the future, that can create future cash flow and all. And the word and is something that we need to be spending more time thinking about and utilizing. And so those two things have kind of been the story of the life insurance and how it's positioned.
Right. No, I think it's a like I said, a really good phrase. It's a really good explanation of what the product is, and it's why I think books like yours are so important to read, because people have such a misunderstanding about whole life insurance because there's so much inaccurate and sometimes quite frankly misleading information out there about it. And a lot of the times that misleading information is put out there to promote some other narrative. Usually it's buy term and invest the difference. And so people don't know that a specially designed high cash value dividend paying whole life insurance provides so many freaking benefits. And when you hear somebody say, I actually heard it the other day I was doing a video breakdown, and the gentleman said, well, one of the reasons that whole life insurance is a scam is because it's a terrible investment. And right there, it's extremely misleading, because you're fixating on one small minor aspect of whole life insurance, which is that we get so fixated on internal rate of return, right? When in reality, there are so many other benefits that we can get from this product. The problem is people don't know that it does all of these other things, right? So it's a good segue into the first part that I want to talk about with regards to what makes whole life insurance an and asset. All right. So we know that it's dividend paying whole life insurance, but what is it about whole life insurance that allows us to do multiple things, that allows us to give our dollars multiple jobs, right? And this kind of transitions into that compound and control aspect that you talk about in the book. That's one of the things that just changed my life when it comes to building wealth. When I realized that, holy smokes, I could put my money into an asset that is going to compound for the rest of my life, and I have control, liquidity, access to that money to continue to build wealth like I normally would, or cover emergencies or whatever it is. Like, that actually exists. I had no idea that was even a feature with whole life insurance, right? So talk to me a little bit about that aspect. What is it that makes the and asset the actual and asset, like where we can do multiple things with it? And then let's start to transition into that compound and control aspect of it.
Yeah, so the controlled compounding was for me like one of the light bulbs, because a lot of times you have the trade-off between, if you have a lot of control, you're not usually getting the benefits of compounding. And if you get the benefits of compounding, a lot of times that comes with a lack of control. Right. So let's define control. When I'm talking about control, I'm talking about the ability to utilize the cash value to do whatever you want. That's what I'm talking about. So it's liquidity, it's access, without penalties and all. So that's what I mean with control. When I define compounding, it's just the thing getting more valuable over time. So not only is the cash value compounding, not only is the death benefit in most cases compounding, but all the other benefits that come with insurance today also grow. So a lot of times when you think of compounding, you're just thinking of cash value. There's actually every benefit of life insurance compounds as well. And so the compounding is the future value of this thing growing. Okay, so those are really the two breakdowns. And the light bulb moment for me was like, hey, if I could have control of my capital throughout my life to invest in things that I care about and do the things that I care about, and I'm getting the benefit of compounding, that 1-2 punch could be valuable. Now, I'll tell you where it's not valuable. It's not valuable if I'm buying dumb stuff or investing in bad investments. Then it's worse off. because I'm using my external activity to do activities that are not getting me closer. But I can't speak for yourself, but for myself, I've made some awesome decisions when it comes to business. And I'm not going to say it's just because of money, but my money situation has allowed me to make money in business and serve more people. And I'm getting all the benefits of insurance at the same time. So it really comes down to how you use your policy. That really is the it factor between, are you going to grow your wealth or are you just going to maintain? And I think of life insurance as the foundation.
100%. Yeah, there's a lot of good stuff there. That's kind of where the infinite banking concept comes into play, where you have the and asset, this dividend paying whole life insurance. That's the tool. That's the asset that we use to implement a strategy like infinite banking, which I'm a huge fan of. It's completely changed my life and the lives of some of the people that I love and care about as well. But it does come down to how you utilize the policy. I've heard you talk about this before, where if you're not careful with it, if you're not strategic with it, intentional with this, then you essentially take what is one of the safest assets on the planet and you introduce a lot of unnecessary risk into the equation. But that's not a function of the policy. That comes down to how you are actually utilizing the policy, right? Correct. So I think that's a really, really important part of this, because oftentimes, I mean, like when I started learning about this, it was just blowing my mind, like all the different benefits that we get. And, we get really excited about those types of things, but we don't want to take a safe asset and somehow that gives us permission to go buy stupid things. Invest in the next cryptocurrency project.
We all understand a savings account. So let's say you have money saved in a savings account, and let's say that savings account pays you 3% interest. Now you have liquidity of that money, and you go and put that money into a bad investment that you lose it all. Is that the savings account's fault, or is that your fault?
That's your fault.
It's your fault, but you could say that the savings account gave you access to that money and control. And if it locked it up and you didn't have access, so you can see where control could be a double-edged sword, but also you can make that same scenario. That savings account is 3%. Now you go and invest in yourself or your business or a marketing campaign, which you know a thing or two about, and now you tripled your money. Did the savings account triple your money? No, your activity tripled your money. It just gave you the ability to that. We're just giving you a way more valuable savings account long term. That includes a death benefit, includes creditor protection, includes all these other benefits. And so that's for me. Like for me, I believe everyone should know about this asset, and I also believe that it's not the greatest thing since sliced bread. It's just like, if I could use a credit card versus a debit card, I'm using a credit card because of the extra perks. Same thing goes long term. Having life insurance has so many benefits, not just now, but for generations to come. I'm going to have that at the foundation, and I'm going to utilize that to invest and make moves. And that for me, and if more people got that, I think there would just be a greater sense of financial literacy, and we would actually be better off as a country if more people had insurance, because they're going to make sure that the next generation is taken care of.
What's up, my fellow wealth creator? Pardon the quick interruption. I hope you are enjoying this podcast episode. I really appreciate you tuning in. I wanted to just real quick remind you about all of the really awesome, powerful tools, training, resources, etc., that I have for you in the description. I want to make sure you take advantage of it. These are things that have made such a profound difference in a significant impact in my own wealth building journey, and I want to share that with you guys. So I have all kinds of different masterclasses. I'm finishing up my Millennial Wealth Creator University as well. So make sure you check out all those resources and take advantage of them, because they've made such a huge difference in my life. So with that said, thank you again. Enjoy the rest of the episode. 100%. And I've heard you talk about this as well, where it's also kind of like a forced savings account. Obviously, we're talking about life insurance here, but that's another benefit that I see from the and asset as well. And addressing the savings crisis that we really have in this country. I think it's, what is it, like half of, I mean, it's an astronomically high number of people that don't even have $1,000 saved up for an emergency. A lot of people have more credit card debt than they do savings. But what if we obviously financial education, really important part of this. But what if we started with a really strong foundation, instead of putting money away for 30, 40 years, speculating on the market. Nothing necessarily wrong with the market or whatnot, but what if we focused on establishing that foundation first, right? We have our premium payment every single year. It's kind of like a forced savings vehicle because we have to make those premium payments every year. Otherwise, we could potentially lapse the policy. But it's not like a regular bill where we don't have like car insurance. We don't get anything other than the coverage for car insurance, but that money is gone forever. With whole life insurance, the money is accumulating cash value, so we actually have access to it, right? So another benefit you could argue is, I've heard you make this argument before, where it's actually a really good savings vehicle, a forced savings vehicle as well. I think that's another lost aspect. Like people just, again, they don't understand how this thing actually works, and they've been not indoctrinated is not the right word, but like they just heard so many bad things about it that they don't realize all the benefits that we actually get from it. And one of the ways I actually describe the end asset is with regards to like this kind of type of savings vehicle is like imagine if your bank called you up, guys, and they said, "Hey, Matt, just want to let you know we have this awesome new savings account. It's going to pay you roughly 4% tax-free compound growth for the rest of your life. And we're actually going to allow you to use the money in the account to cover emergencies, take advantage of wealth building opportunities without interrupting that compound growth. And then at the same time, we're going to add a massive death benefit on top of it. Is that a savings account that you would be interested in?" I think most people would say yes to that. They just don't know that that's how it actually works, because what I just described there is similar to how a whole life insurance policy works, guys. So it's incredibly powerful. And I want to touch a little bit more on how we use the policy, right? So maybe we can get into like some specific examples here, because I'll tell you what, the end asset has been incredible in my life when it comes to building wealth. I often say that it actually allows us to accelerate the wealth building process in our lives, because it can allow us to build wealth in multiple places at once. Mark Moss talks about this on his channel all the time as well, having whole life insurance as the foundation. And because we have access to that cash value, we can borrow against it. And one of the ways I use it is I borrow against my policy at roughly 6%. And then I lend it out to my real estate investor to do his fix and flip deals at 13% plus a point. It's very similar to what banks do when they pay us 1% on our savings account. They lend it back to us at 4 or 5% for our auto loans, mortgages, whatever, right? We're starting to replicate what the banks actually do. But the beauty of doing that is that my cash value is still compounding in the policy while I do that. The only cost to doing it is the little bit of interest that I pay on that policy loan. That's it, right? It's just, and the way that I think about that policy loan interest, Caleb, give me your thoughts on this, is I see it as, especially when we're using it to build wealth, and we're being strategic with it. I'm not dumping it into some ICO or whatever, okay, latest cryptocurrency scam, right? It's invested in real estate. It's secured by a mortgage. It's very strategic. Okay. But I see the policy loan interest as just a cost of doing business, right? A cost of having this really strong foundation and being able to build wealth in multiple places at once. Because one of the things one of the complaints or pushbacks I hear a lot with the end asset is you're paying interest to borrow your own money, right? Which I think is a little misleading. Okay. But I see it as just a cost of doing business. Where I'm compounding in one area, but I'm also building wealth in another. I don't see why I wouldn't do that over and over again, right? What are your thoughts on any of that?
Well, I tell you, you said a lot of things there. I explain it as control costs, so very similar to your language. So this is the cost of control. So if 6% is that's the cost of control. It's cost you 6% to control capital. And then the question would be, is it worth you paying interest to use someone else's money while you're getting the benefits of insurance? That's the question. And if you just cared about the internal rate of return and compounding, the answer probably would be no. You'd probably be better off if I could withdraw that money and put it back. I would actually be better off if that's the only thing I cared about. So if I'm earning 4% compounding and I'm paying 6%, if I had the option to withdraw that money and put it back, I would do that. And but you can't do that. So just an FYI, you can't do that with insurance. So then why is borrowing good? Well, it's because life insurance gets you a lot more benefits than just the internal rate of return growth. There's other benefits that we're not factoring in. And when you factor in all those other benefits, you go, well, absolutely. I would totally borrow against my life insurance policy because of all the other benefits I'm getting. But Matt, if people don't understand that, there is that question, because it's like, why am I borrowing my own money? Well, you're not actually. You're not. It's not. You're not borrowing your own money. But you have to, in order for you to buy into that, you have to see, like, does this make sense to your overarching strategy? And it does if you value insurance and all the other benefits that it doesn't. If the only thing you cared about was growth rate, then like we could run a lot of spreadsheets, and for some people they may want to do it, and for some other people they don't. I believe it becomes a no-brainer if you understand the other benefits to insurance.
Right, 100%. Walk me through some of the ways how you determine how you use your policy. How do you typically use the end asset in your life?
Great question.
Do you use it for real estate or emergencies, or like how do you usually use
question.
it?
So I'll walk you through the framework, and then I'll talk to you about how I use it. So the framework is this. If I have a control cost of 7% or 6%, I first of all need to make sure that the activity that I'm doing is greater value than 6%. So let me explain that. If I am going to invest money and I earn 6% and I'm paying 6%, well, I just did a lot of work, took on unnecessary risk for no reason. It's dumb.
Right.
I could, if I earned greater, like a 10%, now I'm paying 6, earning 4. Okay, that's at least positive arbitrage. That's great. Right. There needs to be risk factored into that though as well. So the first scenario would be, I need to make sure that my activity I value greater than the control cost. So even if I buy something like a car or vacation, I just need to know that that car and vacation I value more than the control cost. So I'm not anti going on vacation or buying a car, not at all. I just am honest with myself to say, going on vacation it's a cost. It's costing me, and I need to value that with that cost incorporated into that. Because if I didn't take a policy loan, I would actually be farther ahead. So that's that aspect. How I think about it is not only the mathematical deal of the external rate of return, but I also factor in liquidity and opportunity cost. So if I had, $500,000 of cash value, and I had an opportunity to put it all into something that was 9% rate of return, and let's say I'm borrowing at 6 to make 9. Well, that math works, right? It does. Would I do that? No. The reason I wouldn't do that is I wouldn't want to tie up all my money in a 9%. Right. You might say it's not your money. You're right, but I'm tying up my liquidity and access to capital for 9%. Because as a business owner, I just think differently. I want to make 20% kind of deal. Right. And so do I always make 20% on my money each year? No. But sometimes that means I'm not going to take opportunities at 9 or 10% to allow me to make money on future deals. And so how I use my policy is I use it first and foremost as an emergency fund, and then as an opportunity fund. And I'm mainly looking for opportunities in business to deploy to grow wealth. And we talk about volatility buffer. I have a pretty big volatility buffer as well, because my business is going up and down, and I just want to make sure that I can weather the storm. So if you look at my scenario, I have a lot of cash value that's not being loaned out, and you might be like, Caleb, you could make more money. The answer is yes, I could. And I'm always open to doing real estate or debt funds and all. But first and foremost, there's a security that comes by having that volatility buffer, because I know that business is going up and down, and I want to make sure that I can weather the storm in that. So that's, for me personally, how I use it. If someone's not entrepreneurial, I would just make sure that you are maximizing your risk-adjusted return. So just because something's going to say it's going to earn 50% doesn't mean it's actually going to earn 50%. There's probably a lot more risk that is entailed there. And so you got to figure out where that breaks down, but you also need to factor in the value of liquidity. What is the value of having access to capital? For some people, it's higher. For some people, it's lower. All of that factors into how you should use your policy. Matt, I know that's a lot of words,
No?
but I do think it's important for you to understand like how I think about policy loans.
Sure. No, that was awesome. There's a lot of really good stuff there. I'll start by addressing the risk adjusted return and like your example of like just because something says it's going to earn 20, 50%, whatever, doesn't mean it's going to. Now, if you understand exactly what you're doing with that, okay. Because I think education is the key to lowering risk. Garrett Gunderson talks about this all the time, where there aren't necessarily risky investments. There's risky investors, right? So it comes down to what you're putting your money into. Do you know, like, and understand it? That's one of the things that he talks about pretty frequently. And if you do, then you're significantly reducing your risk. So for example, when I lend on real estate, like some people would say, wow, you're giving all that money to a complete stranger halfway across the country, right? It sounds really risky, right? But if you know what you're doing, you understand the documents and contracts involved, you've vetted the investor really good. Like there's a lot of ways to reduce that risk. And then at that point, you ask yourself, does it make sense? Does it make sense for me to borrow at 6 and lend at 13? Well, yeah, in that scenario it does, right? But it's important to understand what you're actually putting your money into, because otherwise you're introducing a lot of unnecessary risk into the equation. Now, the other parts I think were really, really powerful, where you're talking about I think the idea of opportunity cost when it comes to deciding what to use your policy for. So I for example, I have a decent amount of cash value. I'm very careful with it now because I've actually been in a situation, I've learned this the hard way, where I didn't have enough capital, liquidity to take advantage of an opportunity that was put in front of me that I would have loved to do. But I had used a portion of my policy for something else, and I lost that opportunity because of it, right? So what's the opportunity cost that you're giving up when you're utilizing your policy? That's something that you absolutely need to factor in. And like you mentioned, there's nothing necessarily wrong with using a policy for going on vacation. I use my policy to purchase my first vehicle, right? But it was also because I had enough liquidity to do it and still take advantage of other opportunities in my business, right? So I think that's a really important factor when determining like how you're actually going to use your policy. Kind of brings up another question, Caleb. I see a lot of content out there. I've seen you break down some of these videos as well about how you can get rich buying vehicles and going on vacations and stuff like that because of something like the and asset. I tend to agree with you that it's a little bit misleading. With that said, I've had conversations with people where, and you have to be careful with this, but I had a conversation with a lady that was interested in the and asset, this whole life insurance policy, but she said that she didn't think she could afford it because they like to go on family vacations, which I can't argue with that. Like, go on your family vacations. That's why we make money, right? But what if you could do both, right? Because again, this is an and asset. What if you take the money that you're spending on vacations, put it into the policy first, borrow against it, then go on vacation? Right? Because your cash value is still compounding. Now, is that how I would use my policy? No. But in her situation, that could make sense. Yeah. Now, does that mean she's going to get rich?
Well, let's just break that down. There still is that loan needs to be paid back somehow. And so so if she was able to do that, we would have to generate an area where she could save money. So it's like,
right.
So you get what I'm saying? So it's like maybe she could save 10 grand, but she spends 5 grand on vacations. So maybe now it's like, okay, let's put 15. Okay. But you have to figure out how that gets repaid to make it sustainable. Otherwise you're becoming a little over leveraged in cash flow. But I totally agree that if someone's already going to be building in certain things, building that into the plan is great. But we also just have to remind ourselves that we just have to help people save more money as well. And that's a big part. And I think people do save more money when they understand what this entails. But that's part of the strategy, is helping you save more. But I'll let you finish your thoughts. So I totally love the concept, but I I would just really, really make sure from a cash flow perspective, we understand the players in the game.
Right. Yeah, 100%. In order for this to work, I mean, you really do have to be able to save money on a regular basis because you're going to, one, you're going to have your premium payments that you're going to want
Yep.
to make. But if you're borrowing against it, you're going to need to pay that policy loan back as
You'll want
well.
to. You don't have to, but you'll want to. Yeah. At least
You
the
absolutely
interest.
will. See,
Yeah.
I say have to because if you don't, you can really get into a lot of trouble.
Exactly. And that's I actually appreciate that. Um, yeah, because that's another feature, flexible loans, but that also could get you in trouble because they're flexible
Right.
loans. So it's like it's so interesting, man, because I interviewed the founder of the 401k, and I asked
Oh
him
yeah,
what
Ted
his
Benna. Yeah.
yeah, I asked him what his favorite feature of the 401k was. And he said lack of flexibility. It's like your money's
Mhm.
locked up and it forces you to save your money and not access
Right.
it. And I laughed inside because I was like, that's the reason I hate the 401k.
Right.
And so, but it was so funny because his benefit was and it didn't make it right or wrong. I actually tend to agree with him. If I just had to zoom out, it's actually true that if you gave access to people, they would just spend it on dumb stuff. So it's
Right.
like, I totally resonate with that. And the
Yep.
fact that these loans are flexible and doesn't force you to repay them could be a terrible thing for someone because it could
Right.
just so I just want to acknowledge that, but it's also for me, I just believe more options is better than less options. But that only works if you're responsible. And so don't do this
Correct.
strategy if you're not a responsible human because I just I think there's too many avenues where you could hurt yourself. Um,
Absolutely.
if you don't have a system or some type of accountability.
Because with control comes responsibility.
Yes.
If you're going to have that control, if you're going to have access to the money in your policy, that comes with a lot of responsibility. And if you're not going to take that responsibility, this thing could hurt you very significantly. It could set you back quite a bit. This
Yep.
can significantly help you accelerate the wealth building process in your life. I say that with so much confidence because I've experienced that. But without taking responsibility for that control, it could wreck you. You have to be very careful with it, very intentional,
Yeah.
right? Yeah, I actually I interviewed Ted as well. This was probably 8 months ago.
That's
We didn't
cool.
bring that up, but we talked a lot about how it does like lock up the money and stuff. And as entrepreneurs, I think we really value that control and liquidity. We want access to capital to build wealth. But you're right, and actually, like I used to be diametrically opposed to the 401k. I'm still not really a fan of it, but that's really only because it doesn't make sense for me. I
Yeah.
can absolutely see why locking money up and making it difficult to access would be beneficial for a lot of
Yep.
people.
Yep.
Like you just have to look at basic numbers. I alluded to it earlier, where most people don't have any savings. They have more credit card debt than anything else. Like obviously there is a problem with control of liquidity that people
Yep.
have, right? You
Yep.
just have to look at all the freaking credit card debt that people have.
Yep.
So
Totally.
is there benefit of locking it up? Sure. I wouldn't want to do that,
Yeah.
but that is something to consider. 100%.
Yeah.
Um, there was something else I was going to ask you about the cars, about financing cars through it. I guess I'll just start with this.
I'll say this: if you're an entrepreneur and you believe that a car helps you position yourself to close more, you could make the argument that a car is an asset. So I'm not opposed to that. I just make sure that that's in your equation. You know what I'm saying?
Right.
And that's there's in a lot of cases where a car could be very valuable to you as a business. And so it's again, is it the car or is it the other factors? But that's
Right.
there's no doubt that certain people that drive nice cars get themselves in a situation where they're viewed differently, and as a result, they look at that as an asset or an investment.
Right. Yeah. If it helps you show up in business a lot more powerfully, if you're using it maybe as a tax write-off or something like that, I could see it. I just did a segment, an episode the other day though about this, and how people are like just drowning in car paint, like how much people are paying for cars. I
Yeah.
interviewed a friend of mine the other day. She's a loan officer. She does mortgages, And she frequently sees people with like $2,000 a month of freaking car payments. I
Crazy.
mean, I guess if that makes sense for your business, go for it. But it doesn't really make sense to me. But anyways, I think
And
so. So one of
are you a
the
car person?
uh, not really. I don't need to have a brand new car all the
Okay.
time. Like,
Yep. I'm not a car person at all. So
yeah,
for me, I just have to acknowledge that I don't value it. So I'm not going to try to pretend to be something I'm not.
yeah,
Some people really, really like it, and I don't know. I don't judge them either. It's just like, so that's you know, it's just whatever you value.
right. What do you think about using your policy to purchase a vehicle from an aspect of recapturing opportunity costs? So, for example, instead of paying cash for a vehicle, if I put the money into a policy first, so that I get that compound growth for the rest of my life, I borrow against the policy, then buy the vehicle, or and just
Yep.
slowly pay it back over time, like I normally would a bank loan. What are your thoughts on using a policy like that to
Yeah.
recapture opportunity costs?
So if all I cared about was the cash value growth, compounding, and not, if that's all I cared about, I would pay cash, redirect that money into a policy. If I valued other things than just the growth rate of cash, like protection and all the other benefits of insurance, I would start the insurance policy first. Um,
Gotcha.
so that's what I would do. And then if I had the insurance policy and I want the car, I would look at what are car loans right now, and let's say what are car loans right now,
That's a good
like
question.
interest rate.
7 to 10%. The
Okay,
last time I was quoted one, I had decent credit. It was 10%. So
okay, hold on. I'm just gonna go ChatGPT and ask, what is car loan rates right now? We'll do it in real time. I'll give you real. Okay,
let's do it.
so 7.2%. Varies by lender, but yeah, 8 to 12 for used cars. Okay, so we'll say 8%. We'll say 8%, but as the rates come down, they'll come down. Okay, so let's say you come to me and you're like, Caleb, I want to buy this car, and I can take a policy loan from my policy for 6%, or I could take a bank loan for 8%. From a cash flow perspective, if all I cared about was just this scenario, I would take the policy loan. Personally, I would take the bank loan. Why? Caleb, am I crazy? Well, I value liquidity more than that extra 2%.
Right.
So I personally would take the bank loan. I can pay that bank loan off at any time. I have the cash. But I look at that bank loan as an investment, but in reverse. That's an 8% investment. Would I tie all my money up for an 8% investment? No. Then what? So that's and this is a very like complex. This is not like 101. We're now getting into 201, but I for things that are easy to get bank loans for, like homes and cars, I think that also needs to be factored in, because say you have an amazing opportunity for a business. Is it easier to get a business loan or a car loan? It's easy to
Right.
get a car loan. I'm not saying that's the
Right.
right thing. I'm just saying that's the reality. And so I could have all my money in this nice car, and financially, quote unquote, could make sense, but I would much rather stay control of that money, pay the bank. Am I really in debt? Well, I have capital that I could pay that off at any time. And if an opportunity comes along, now I can choose. But let's say like no opportunities come along, and I'm like, hey, this is dumb. I can always pay that loan off, with my cash value, and then pay the loan back to the insurance company. But that's
Sure.
that's very much how I think, as it relates to this. Personally, though, I don't have any car loans because we have two cars. I'm driving a 6-year-old Tesla, and my wife is driving a used Volvo. That both cars are awesome. They get the trick done, and we're just not car people. And
Right.
so that's personally kind of our situation.
Yeah. It comes down to individual situations, what makes sense, based on what you have going on. Are you running a business? Are you looking for those opportunities? Or maybe you're just starting out with this to recapture opportunity costs and to get some experience with the end asset. That itself could be very valuable. So maybe you start with financing a vehicle, and as you learn how to take advantage of other investment opportunities, grow a business, whatever, then maybe that becomes a source of capital, right? So
Yep.
a lot of different scenarios there. I did want to, I really wanted to touch on this part too, and then we'll start to wrap it up. Um, let's talk about some of your other favorite benefits of the end asset. I'll start with mine. I'd love to get your thoughts on this. I think one of the most underrated benefits of the end asset are these illness riders. I'm going to give you a very specific reason why. And what I'm talking about here, guys, is these chronic critical terminal illness riders. Okay. Now, I've talked about these quite a bit on my channel. I've interviewed Chris Kirkpatrick many times where he talks about how these benefits, these riders literally contributed to saving his father-in-law's life when he got sick, when he was diagnosed with pancreatic cancer, given 3 months to live. 5 years later, I shake his hand at the Aligned Wealth Experience event. Okay. And it's because he was able to get access to a significant amount of capital and financial resources to get the alternative care that ultimately saved his life. Okay. So that's a success story with these riders. But there's so many people, and I'm starting to see this more than I would like to, Caleb. I just saw this. This was a couple of months ago. A gentleman, he's an acquaintance, or he's the husband of an acquaintance of mine. And my acquaintance, she did a post, unfortunately, about him being diagnosed with non-Hodgkin's lymphoma at 40 years old. At 40 years old. And, she's posting like GoFundMe, their GoFundMe page. And it's great to see like the community rallying together to support them and whatnot. And, but I can't help but feel just sad, I guess, that like, what if he had a policy in place with these different riders, he's diagnosed with cancer, and he gets access to a significant source of financial resources that could save his life, maybe prevent bankrupting the family? Because I got news for you guys. There's a lot of red tape with health insurance. It's very important to have health insurance. Okay. But at the end of the day, they're in business to make profit, and there's a lot of red tape. Is it going to cover everything? I don't know. I do know that one of the number one reasons that people go bankrupt is due to medical bills. Okay. So what if he had a policy, that he could accelerate the death benefit? That's essentially what these riders do, so that he could get the care that he wants and make sure that it's not bankrupting his family. We don't have to do the GoFundMe pages, like it just to not be in that situation. But oftentimes we think, I'm young. What do I need life insurance for? I heard whole life insurance is a terrible investment. But guys, this is one of the most underrated aspects of the end asset. I've just seen it too many times. Caleb, what are your thoughts on that?
I'll give you two. The death benefit. The death benefit, first and foremost, is like the death benefit makes the chronic illness rider even possible, because the insurance companies are on the hook anyways to pay out this death benefit. They'll accelerate it. It's an easy benefit for them to add. It's valuable for us, but it's only possible because they have the death benefit on the books. And so the more I learn about the death benefit and how it's like it is certain that you and I are going to die, and you and I both have permanent contracts that have millions of dollars going to get paid upon that. That's a valuable thing when it comes to planning. It just really is.
Right.
There's even, you got to look at your net worth with and without the death benefit. And that's another powerful thing. Like with your net worth with the death benefit could be a lot of money, which is just really neat to see. The other aspect, and this is a version of the death benefit, but the more I learn about retirement, which I'm not a big fan of that word, I call it future cash flow. Life insurance gives you so many options for future cash flow. Right. And the more I learn about that, the more I just wish more people would talk about it. And I think there will be a day where you cannot be a fiduciary without mentioning the power of life insurance as a part of an overall strategy. And I know the whole fiduciaries gets thrown around, but like, how cool would that be if people acknowledge that, no, life insurance is really valuable? We can debate on how valuable. It's so valuable that I believe everyone should have an aspect of it if they're doing proper planning.
Right. 100%. At least explore it. Like, why wouldn't you at least learn what the benefits are, how this thing operates? Because how can you make an informed decision if you don't know how this thing works? You could be missing out on so many benefits because you have this preconceived notion about how horrible it is because that's what some guru told you. But like,
Yeah.
guys, think about all the different benefits that we've talked about just in this one video. Compound, control, the illness riders, how the like the death benefit just from a legacy play, but also retirement. You might be thinking like, what the heck does whole life insurance have to do with retirement? Actually, has a lot to do with it. I've done videos on that as well. There's so many benefits to having a whole life insurance policy in retirement that, mind you, can be paid up where you don't even have to pay into this thing for your entire life. Okay. I think that's another benefit that people overlook. Okay. But in conclusion, guys, I can tell you this. I sleep so much better at night with this foundation in place, with this and asset, knowing that I have that my wealth is compounding, tax-free, tax advantaged environment. I have control of liquidity, access to liquidity to build wealth like I normally would. It's not like I'm sacrificing all of my investments over here just to have whole life insurance like so many people would have you believe.
Yeah.
That's
Good.
not the case at all. Okay. I have these riders that will protect me financially if I get sick. I'm only 37 years old, but we never know. We never know.
Yeah.
But just having that in place, the peace of mind, like how do you put a rate of return on peace of mind? I don't think you can. And knowing that my loved ones will be taken care of if I pass away prematurely, I'm going to tell you what, guys, you sleep so much better at night. Like, screw the internal rate of return. Okay, we could figure out how to get that, outside of the policy. How about we figure out how do we establish this really strong financial foundation to where we almost become bulletproof, right? We just sleep so much better at night. I don't think you could put a price on that.
Yeah, I think the whole, if something doesn't help you sleep better at night, don't do it. Don't do it.
Amen.
I mean, early on, I would try to convince people like, don't pay off your home. All these reasons why. It's like, no, if you sleep better paying off your home, at least if I give you the pros and cons and the math,
right,
pay it off, because the sleep at night test is really a valuable thing. And I don't have to agree with your scenario, but your gut will rarely ever lie to you.
Right. And life is not just about numbers. Chris Kirkpatrick says this all the time. Life doesn't happen on a spreadsheet, right? Does it make sense from a numbers perspective to pay off a house? Probably not. Maybe. But that's not the only thing that gets factored into the equation, guys. That's why it's so important to hear both sides of the story, educate yourself about how these things work and how these different strategies and assets and tools fit into your overall wealth building plan, and then make a decision. Stop listening to one side of the story telling you that this is bad or you should do it this way. There's no one size fits all.
Yeah.
All right.
Yeah, it's good.
So just keep that in mind. Caleb, it's been awesome, man.
Dude.
Really, really enjoyed the conversation. I want to be respectful of your time. I could talk about this for hours.
Yeah.
Right. But I think we discussed some really good topics, specifically about this and asset. We talked a lot about the different benefits. Hopefully, some light bulb moments took place for people. That's really my goal with these conversations and the channel overall, is just to bring awareness to these things so that people do their research and make their own decisions. So I really appreciate you. It's an honor to be a part of this journey with you. You've made such a profound impact on my life. And I just, again, thank you. I'm so grateful for you and everything that you do. And I appreciate the conversation today, man. Is there anything that you're working on now that you want people to know about? I'm going to link down below to your book, your website, the And Asset Vault and all that. Anything else you want people to know about?
Follow us on YouTube. We're doing some cool things. We got some fun things cooking, and YouTube's the best place to follow us. So
awesome.
Appreciate you down below.
Yeah, absolutely.
Okay.
All right, man. Looking forward to the next one. Take care.
Thank you. Bye.
Bye.